So today I'm gonna talk about a trade I just put on in SMCI, which is super microcomputer. I sold a put spread, and so we'll look at a couple things on why I decided to put this trade on, what it is, and how it works. So I'm just going through like the market opens up. I'm doing what I normally do. Like right now, the S&P 500 futures are down about 28 handles. That's about 0.5%. Nasdaq futures are down, um, what 0.75%. We got 156 handles over here. Dow futures down. Russell futures are down. The bonds are down and the notes are down. So we got bonds and we got the indices down. And then when I look at the volatility products, I look at the VIX and the VIX futures. They're both green on the day. So we got a pretty much a down day going right now as it stands. And Bitcoin is going crazy. Again, it's up 2.5%. So let's pull up a chart on Bitcoin before I get now. You guys see, um look at what level where we at. Here's the wick. We got up here right here to my 2618 on my fib extension coming out of this channel right here. Right. So we're holding. I'm willing to bet that we may stay here for the rest of the week. I don't know that for sure, but I do have a level up after this, right? My next level up is right up here at the 3618, which is right around 108,000. So I do think that Bitcoin will continue to go higher. Now, part of that, I don't know for sure, but I think that yesterday, President-elect Trump, his pick for to replace Gary Gensler is a someone who's pro crypto. I think it was Teresa something. But if you were to Google that, it'll pop up. And so that person is going to be, instead of regulating cryptocurrencies, I think the cryptos will kind of, the next 4 years you're going to see a lot of digital products pretty much getting the green light to go do what they need to do. So that's bullish. Now, some might say that was already priced in. We knew that Trump was going to be pro crypto because he said he was going to be pro crypto. So here you go. Now, so what I start doing is when I see that Bitcoin is up over here, looking at my watch list, then I'll go and try to find me other stocks that may move similar to crypto. And then I came over here. I came to the Tasty. So basically show you guys how you come over here, pull up your watch list, like this little right here where you see these little bullet points. You would click on that. Then once you pull that up, come over here, click the little drop down menu. I could scroll down to Tasty, and then I came down to fast movers. And then I just started going down, going down the list. Now, and then I got down to just clicking on different ones and going. So you see SMCI, which is super microcomputer. Uh, it's inside the NASDAQ. That's actually down on the day. So you may say, well, why would you get bullish? Me personally, I like to get long. If you hear me say long or short, long meaning going up. Short generally means going down most of the time. So getting long meaning like I think that the market will either go up or stay neutral. Selling a put spread, and also there was an IV rank in this at the time when I did the trade. The IV rank I think was like 72. It was in the 70s. The rule is, as far as like the research goes for Tasty, is that 30 and above on IV ranks, other than ETFs, you want to try to sell premium. That's optimal time for selling premium. So then once I seen that, and also another thing, when I look at volume over here in this column, it's 24 million shares traded already in this particular product. So then with that being said, I want to come over here and I want to get bullish, right? Then you start looking at, well, what type of strategies when you're trading options, what, like if you're looking at over here, you come to the option chain, what do you want to decide? Like how far out you want to go, what contract you want to use. 90% of the time, I'm going to be in the monthly for selling premium, unless I'm doing like some scalping or something like that. And that'll put me right here. The monthly is December 20th. That's 30 days out. That's the front month. And I came right here. And then at that point, then I start messing around. Now, one thing I looked at when placing this trade is something that I do, especially when the IV ranking, you can see it's dropping, right? Even though the market is down a little bit on the day in this particular product, the IV rank is dropping. So vol is coming out. But when I came over here, open that back up, then I'll look at, so this little ruler right here in the middle is Tasty's own little proprietary way of showing you the expected move or how they gauge what the move will be for this particular strike, or excuse me, for this option contract. And then what I'll do is I came down here, so I said, okay, so it goes to the downside. Even though you said if you're looking at this, you see me going up. This is just how the option chain is. $19. So it's a $7.24 expected move. So that from here will put us right around 19. This option is, let's call it a buck. On the bid side is 97.98. Ask side is $1.04. So somewhere in the middle, we'll call it a buck. But if I go to the upside, look up here. I go up 7.24. Now this option on the call side is 157. On the bid, the ask is 161. So right there in the middle, we call it 159, 160, right? That means that we got call skew in this particular product, meaning the calls are more expensive than the puts. And for me, when I see that, that means that if I was selling calls, you're gonna get more premium, but you're taking more risk because the market is saying that it has a bullish tint to it in this particular product, and more people are betting that this product goes up. That's how I view it. That's how I read it. And I want to go with everyone else. So I look to sell a put or a put spread. So I just came over here and just started messing around. Sell the 23 by the 18, take in about 130, a buck 37 in credit, and then voila. And then buy the wing. Now, if you just want to sell a put, you can sell the put, take this off, and then just sell this put or collect $2, $2.18 in credit. And you may say, well, you're selling the put instead of buying the put. If you buy the put, you're betting on the market to go down. But by me selling this put, I'm taking in the credit and I'm betting that the market is going to go up or stay neutral. So it can stay with a trade with selling a put, the market can stay in here, right? You don't necessarily need it to go up because you're selling the 23 strike, which will put you about right here, and you're taking in 218. So anywhere within here, and you get to keep your credit. And one of the things about it, I'm not selling this put to hold it to expiration. More than likely, I'm selling it and holding it for the next realistically 9 to 10 days. Right around the 21, 20 days, that's when you look to either roll out in more time and take more credit or close the trade. And, hopefully you've already made whatever you're going to make. Remember, when you sell an option to close it, you're going to buy it back. So what I want to do is sell this option, take in this credit, and then as the IV rank, as volatility comes out of it, the value of the option will decrease. So instead of it being um, me being right now it's 223, tomorrow or a couple of days from now, we want it to be maybe 150 and then get down to maybe 125. Then we buy it back for the 125 and keep the other $100. That's how you make money selling option premium. That's if I was selling a naked put. Now, when I buy this call, which is what I did, now I bought the wing, so I don't have as much risk. Now, if you look down here, you'll see my max loss is $360. Let me lock this in. Instead of it being, if I take this wing off and just sell this naked put, see how your max loss is $2,070. That would just mean that the stock will have to go to zero, and I'm being margined $1,260. So they're gonna margin my account more money if I sell this naked put. If I buy this wing that caps it, now they're only gonna margin me $360 while I keep the 140 credit. So that would be the benefit of buying the what they would call, terminology is buying the wing. You buy the wing, you then turn your risk into a defined risk trade, and it's less margin, takes more less buying power, and you have to put up less capital to put the trade on. And that's what I basically did. And if we come look at it right now, what is it trading at? I'm down about 15, 16 bucks because I collected 133 in premium, and right now it's trading right around 147, which is fine. I wanted to, instead of me getting long when on an up day, I'd rather get long on a day when it's down. And that's fine. I think it'll come down in here, mess around some, and then go higher. Ultimately, you got a gap here, you got a gap here, and you got a gap here. And to be honest with you, I don't think that this, honestly, I don't think this is a bad stock to maybe own. I'd have to look into the company, Super Microcomputer. I'm guessing it got something to do with AI. If I was to come over and look at the financials of the company, let's see, just to, I just want to see, because I just seen the term like microcomputer. Let's go in here and look and see what the company is. What is it? Super Micro Investor Alert. Attorneys at Law LLP investigate Super Microcomputer Inc.'s directors and officers for breach of fiduciary duties. That was yesterday. Let's see. Go to financials. Here's your income statement about the company. Super Microcomputer Inc. is an application optimized total IT solution. The company provides Silicon Valley based provider of accelerated compute platforms that are application optimized server and storage systems for a variety of markets, including enterprise data centers, cloud computing, artificial intelligence, fifth generation, and edge computing. Basically, it seems like it's all I need to see was AI. I figured that when I looked at the name that it might be honest with you, I'm looking at it like, hey, maybe it may move a Bitcoin. And then I looked at the chart, seen the IV rank, and for me, this is a type of setup. This is my favorite setup. If you guys watch, this would be called, like, generally when I talk about haramis, now this would be like a harami cross because we have the doji candlestick here, and here's the body of this candlestick, and then we got the gap higher. That's a bullish setup for me. So if I didn't have no name and I didn't know anything and I just seen this, I'd trade this. I don't care what it is, as long as it's not like a penny stock or something like that. So, I just wanted to come on here and then talk about, so, just to recap this video, I talked about call skew. I went over the mechanics of selling a put and selling a put spread and talked about a trade that I have on. And then, we'll see how it goes.